In this video, let us understand the importance of GST returns, especially from lender's point of view. Yes, bankers will be insisting on submission of GST returns for analysis purpose, for understanding the business turnover, cash flow related angles. Let's see how it works. GST returns are very important for 6 reasons. Number 1, this will help the bankers to validate the turnover that are reported by the borrowers. Because banks will be collecting this GSTR1 and GSTR3B return, and these returns will show what is the exact sales or the turnover figures of the borrower, because borrowers are supposed to file these returns with the GST authorities. So that will give complete information about the sales. So with this, banks will be able to cross-check the sales what they have reported in the financial statements or loan proposals with this external statement. So this will help in preventing understatement of the revenue from the borrower side or overstatement of revenue for the purpose of bank loans. So this is reason 1. Number 2, it will also give insights into cash flows. These GST returns are filed at monthly interval, quarterly interval, as the case may be. So by looking at this, you will know what is the sales that has been made. And by cross-checking with the bank statement, you will be able to relate the sales and cash flows. And if the sales are fluctuating, seasonal, if they are declining, that will also come in GST returns, because you are going to have month-on-month sales information or quarterly sales information. So by comparing this, you will be able to measure whether there are any seasonal fluctuations or whether there is any drop in sales. So this will help the banks to assess whether the borrower is making enough business to pay their loan obligations. Okay, reason number 2. Reason number 3, it communicates the tax, discipline and compliance part of the borrower. If the bank wants to have business relationship with borrower, that borrower should be financially disciplined and he should also have tax discipline. So if the borrower is filing the GST returns regularly, that shows they are following good financial discipline, they are having good compliance culture. If they are not filing on time, if there are frequent delays or if there are frequent mismatches, that indicates what? There is a poor management. They are not good in financial discipline or compliance part. Or it also indicates there is a liquidity stress. Why they are not filing the return? They are unable to pay the taxes. Why they are unable to pay taxes? Because they have liquidity stress. So everything will come to picture because of this aspect. And number 4, banks can also do counterparty verification. Yes, because the GST returns will have the details of the customers. It will have details of the suppliers. So with this, banks can actually verify whether the borrower is actually dealing with the genuine parties. Okay. And it will also list out the names of the customers. So you get to know whether there is any concentration risk. That is, if the borrower is dependent only on few customers, then there is a concentration risk. That will also come to light when you do this GST return verification. Then it will also give you early warning signals. Let's say you analyze month-on-month turnover and you see there is a sudden drop in GST turnover. What does that indicate? It indicates a possible decline in business. And you also see there is a mismatch between GSTR1, that is sales return, and GSTR3B, that is tax paid return. So this could indicate there is a possible manipulation, because for the purpose of sales, they are showing more, but when it comes to payment of tax, they are showing less. So that indicates a possible manipulation. And sometimes what they'll do, they'll claim high input tax credit even without making actual purchases. So banks can check whether those actual purchases are genuine or not. So all those early warning signals will also come to light. Number 6, it helps the banks to assess the working capital needs of the business. Because you have GST returns that has the turnover related information, and with that, measuring the working capital eligibility becomes more clear and straightforward, and with that, loan limits can be aligned with the actual business activity. So these are all the 6 reasons why analyzing the GST returns are very important from point of view of bankers. If you want to know what are the step-by-step process banks have to follow our channel. Will be releasing the video soon.